Hello and welcome. You're watching Closing Trades here on ET Now. I'm Harsh Saita. Well, some bit of pressure where the Nifty 50 index is concerned. We're 0.6% lower. And there is plenty of pressure even with regard to the breadth. 40 declines to just about 9 advances is what we're seeing. So clearly the pressure is building up. Coal India is the top gainer after those numbers yesterday. Despite the weak numbers, we're still seeing Coal India do quite well. But yesterday, we saw a bit of a correction on the stock. So maybe that contributing to the gains today. Larsen & Toubro is the other one, which is doing fairly well for itself, but well off the day's highs. Just 1% higher on an LNT now. BEL, among the defense pack, is one of the top gainers on the Nifty as well. Dr. Reddy's is under pressure. So is Cipla. So the pharma pack coming back into focus. Cipla's numbers also came largely in line with estimates, but we're seeing a bit of a correction on that counter. HDFC Life also down nearly 2%, Bharti Airtel down 1.8%. Bajaj Finance and Bajaj Finserv also down around 1.5% in trade. So you're seeing all of those play out in terms of where the Nifty 50 constituents go. Let's talk about the Bank Nifty as well. 0.4% lower, so some bit of outperformance, if I can call it that, contributed largely by the PSU banks. A Canara Bank is perched up 3.5% higher in trade on the back of the numbers that it posted. A decent set over there. You're seeing Federal Bank, which is absolutely flat around that 235 mark. The top loser on the Nifty Bank is IndusInd Bank and Kotak Bank, both down by 1% or thereabouts. Let's talk about the broader markets as well. Well, they're outperforming the index for now, at least the Nifty 50 index for now. So the Nifty mid cap as well as the small cap indices, anything between 1/4 to 1/3% lower, and they're holding up slightly better in a slightly healthier fashion. Let's talk about some key losers in terms of sectors. And within that bunch, you're seeing IT, which is down around 0.7%, metals down 0.9%, pharma down 1%, and these are all sectoral indices that I'm talking about. So all of that action playing out. There's no sectoral index in the green. So that's the other piece which is contributing. The breadth as well as even the sector-wise, it's not looking pretty. Across sectors, you're seeing pain. In fact, the realty sector, which was in the green at the start of the day, percent plus higher, is also now well in the red. So you're seeing pressure across the board. In terms of some key losers, and Ixigo is down 15%, again on the back of very, very weak numbers that it posted. Shelly Engineering has been down since the morning, continues to be down around 10%. Vodafone Idea on the back of the AGR dues case we spoke about is down 7%. LIC Housing on the back of weak commentary is down 4.5%. Those are some of the big losers within broader markets. Some of the gainers and switching focus, Webov Global spoke to ET Now, 11% higher the stock price. What was anticipated to be a weak Q1, Q2 has turned out to be a very, very resilient set of quarters that it has delivered. And you can see the stock price action on that. Sagility is the other one, 9% higher. Chennai Petro, PB Fintech, again, on the back of numbers, looking good. BHEL, rock solid numbers, very good execution for Q2, 6% higher on that count. India Cements also is the other one, which is doing fairly well for itself, holding up very, very smartly in trade, Aisha.
Oh, yeah, absolutely. All those buzzers in trade. Look at a Policy Bazaar, a 6% move up. BHEL, again, earnings reaction there. CanBank as well, again, earnings reaction, 3.5% higher there too. In fact, BHEL has now lapped up almost 5.5%. And I think within BHEL and L&T, a large share of the contribution to the pull-up in both the mid-cap as well as the benchmark index is what is currently reflecting. Oil India, CAMS, these are some of your other movers. But look at Dr. Reddy's, for instance. That's been unable to recoup any of its losses, still down by about 4.5%. And Umang Vora stepping down the earnings, Cipla still down about almost 2.5%. But let's welcome on board Rajesh Bhosle and figure out what he's making of the market structure right now. Rajesh, hi, afternoon. Seems like it's taking a bit of a breather today on the downside. Do you think this cool off can last longer, perhaps?
Yeah, hi, afternoon. So if we see the chart structure from the October month, Nifty had already rallied 5%. And since we are now approaching the all-time high levels, so some bit of cool off is definitely happening. Today as well, we have a sensex expiry. So that is why on the index front, we are seeing some lethargic move. But on the weekly chart, if we see, we have already seen a strong cup and handle pattern breakout. So we'll maintain a buy dip approach. Since last few days, 25,800 to 25,700 has been acting as a base. So that will continue to act as a support. And on the higher side, if we see 26,100 to 26,200, that has been a resistance zone. So for now, we are expecting some consolidation, but overall view is positive only, and dip should be considered as a buying opportunity.
Right. Any stock-specific bias, Rajesh, or any trends in specific that you're picking up?
So if we see the entire IOC, HPCL, BPCL counters are performing well. In fact, if we see the charts of BPCL, we are seeing a multi-month breakout. We are seeing a classical head and shoulder pattern breakout, and we expect this outperformance to continue. So BPCL can be bought. It is trading somewhere around 356 with a stop loss of 344. It can be bought for the targets of 375. One more buy call is on MFSL. So if we see the stock is placed on a very strong support during August month, there was a bullish gap that was left and prices are hovering around it. Today we are seeing strong outperformance with prices engulfing last 5 sessions of losses. So we expect strong reversal from current levels. So MFSL Max Financials can be bought with a stop loss of 1510, and in the near term we expect the stock to retest the levels of 1630.
Right. Okay. Stay with us then, Rajesh. Lots more to talk about. But let me now welcome on board Vivek Merchant, Director at Swan Defence and Heavy Industries, to talk about their latest agreement with Mazgaon Dock. Vivek, great to have you on the show. First up, walk us through all the details of this teaming agreement that you've signed between Swan Defence and Mazgaon.
So Swan Defence and Heavy Industries is the erstwhile Pipavav shipyard. It's a shipyard that's come out of NCLT and is now fully up and running. As a shipyard, it is India's largest shipyard. It has the world's fourth largest dry dock. It represents 30% of India's shipbuilding capacity. We have about 164,000 metric tons per annum of fabrication capacity. This yard is a privately owned shipyard. Moving on to Mazgaon Dock, MDL is 18th century onwards. It's a public sector shipyard. They've been delivering warships, including submarines, for the past several years now. The idea of SDHI, or Swan Defence and Heavy Industries, tying up with MDL was, it's a good marriage between capacity and capability, along with experience and expertise. So the idea was to utilize MDL's legacy and more recent experience in naval warship building, along with the capacity and capability of SDHI. The partnership, it's a exclusive teaming agreement for a specific project. The project is a landing platform dock project. It is a Ministry of Defense project that has been approved by the DAC. It is a 33,000 crore project, and we're expecting the RFI and RFPs to be rolled out in the near future. It's an exclusive agreement, and we hope to utilize this agreement as our first major step in the defense sector and help with the Atmanirbhar Bharat program that we have in India.
Vivek.
Okay, Vivek, got it. Hi, this is Harsha. Could you also elaborate on the infra of your company, and specifically how will India's largest dry dock capacity be leveraged for this project? Give us a sense.
In terms of our capacity, we have about 640 acres of land, of which about 300 acres has been developed for the existing facilities that we have. In terms of the existing facilities, we have at the dry dock, which is a 662 by 65 meter dry dock, along with a 600-ton Goliath crane and a couple of 40-ton ELL cranes. Along with this, we have a wet basin and an offshore fabrication yard with unique roll-on roller facilities. This doesn't exist anywhere else in India today. In terms of capacity, we have 164,000 tons per annum of fabrication capacity. The entire facility of fabrication is under covered sheds, which gives us year-round productivity. We also have a pipe shop with a capacity of 1,000 pipes spools per day, again placing us at number one in terms of throughput. All this infrastructure exists, has been refurbished, and is up and running. We have already executed a few repair refit projects at our shipyard, and we are now in the market for new shipbuilding orders. On the fabrication side as well, we are in advanced discussions to have our offshore fabrication facilities up and running. Um, all these facilities will be leveraged. There is no new additional capex required to participate in the LPD project. We are fully ready for it today. Thanks.
Right. Vivek, so how many LPDs are planned initially under this agreement?
The expected RFI is for 4 numbers for the landing platform dock, and our overall budget outlay of rupees 33,000 crores has been envisaged for this project.
Okay. And Vivek, also tell us about the target percentage of indigenous content for the LPDs. Which key systems will be sourced domestically? Give us a sense of that.
In terms of indigenous content, there is no fixed number that we have to targeted internally. We have a minimum of 40% that we're looking at as of today. But to put that into perspective, MDL has been participating in the destroyer frigate programs for the Ministry of Defense, and they have achieved more than 70% of indigenization today. So while I can't put a floor to this level of indigenization, I think the possibilities of indigenizing as much as possible will be explored, as is the direction that we have received from all the way from our Prime Minister to the Ministry of Defense.
Okay, great to have you on the show then. Thank you so much for your time and helping us understand what exactly this agreement with Mazagon Dock is all about. But let's just focus back to markets. And of course, while you're seeing a lot of earnings reactions today, Coal India, surprisingly, an inverse reaction to how the quarterly performance has been. L&T, of course, has been holding out well. Policy Bazaar, BHEL, Canara Bank, that's where you're seeing good amount of activity. But Rajesh is still with us. Rajesh, just wanted to understand if indeed we were to slip a little bit more or consolidate at these levels, what sector do you find as the weakest link right now?
We'll talk more on the positive side. We'll talk more which space likely to perform. So banking and financial definitely are the picks that we are concentrating. They are they have corrected along with the broader markets, but we expect once the consolidation ends, this space will continue to perform. From this space, we are very bullish on the PSU banking space. Bank of Baroda, PNB are some of the counters which we expect that in the near term can give good returns. So any dip or any consolidation should be actually considered as healthy, as we see a strong cycle from here onwards.
Okay, Rajesh, stay with us. Lots more to talk about. We'll take a very quick break. The breadth, of course, is worsened. It's pretty much at the session lows, whichever way you want to cut and dissect. We'll track the markets on the other side. Which is in focus. It reported inline set of Q2 with both PAT as well as the revenue rising on a year-on-year basis, while the margin stayed under pressure. The stock also saw a decline, or rather a sharp one, after the global CEO Umang Vohra resigned. Shrishti Sharma, my colleague, is here to give us more details on how the quarter has been and how the street, Shrishti, is reading into Umang Vohra stepping down.
Well, yes, that's a big surprise coming in from Cipla about the management change, because one of the most familiar faces of Cipla Limited, that is Mr. Umang Vohra, has decided to step down. His term was any which ways ending at 31st of March 2026, and then he did not show the commitment to go ahead and opt for a reappointment, and that's where the management change has come in. We'll talk a bit more on that, but before that, on to the numbers. Not a surprise coming in, an inline set by Cipla, a steady one, what we can call it. Margins at 25%. The India sales have seen a jump of 7% on a YY basis, while the US sales were clocked at $233 million, in line to what we were expecting at ET Now. The company does say that going ahead, they will be launching newer drugs, especially in order to enhance and make their position stronger in their respiratory side. So on to the earnings front, there hasn't been any sort of a surprise, but yes, the big surprise was the management rejig, wherein Mr. Umang Vohra has stepped down from the MD and global CEO position. Definitely in the past 10 years and his journey with Cipla, we have seen so much of happening in Cipla when the company went ahead and maintained its leadership position in the global lung leadership. Digital and manufacturing capabilities was something that Umang was seen to be working on. And in the past 10 years, well, of course, the biggest hit was due to the COVID, and how Cipla transitioned through that was something that we have seen under his leadership. But now the company has also mentioned about the new in charge, wherein Mr. Achin Gupta, the global COO right now, is appointed and elevated to the position of MD, and global CEO will be taking the term from 1st of April 2026. So that's the big development coming in on Cipla. But yes, the stock did react sharply after that management rejig announcement.
All right, still down 2%, Cipla reeling under pressure, and especially after that announcement, of course, that reaction was evident. Thank you so much, Srishti, for that. Narendra Solanki joining us at this point, Head Fundamental Research, Investment Services at Anand Rathi Shares and Stockbrokers. Narendra, let me ask you with regard to Cipla and in fact even Dr. Reddy's, if I can, actually let me not club that. Let me go to Cipla first. Give us a sense, how were the numbers, this leadership change, does it change anything with regard to your estimates in terms of how you see Cipla fundamentally going forward?
Yeah, good afternoon. First of all, let me just inform that Cipla is not under our active coverage. Having said that, I think the numbers were better than expectations. The expectations were not so much great, but yeah, the company has delivered better than expected numbers. Even the growth was also higher than the expectations. Having said that, I think the key change in the management has definitely surprised the market. Even the person was due to retire shortly next year. So this has actually a bit of a surprise in the short term, and now we have to wait and watch how the new management takes over and what kind of strategy they take going ahead. But from the number point of view, it was better than expectations.
Right, okay, that's that on Cipla. The one space, of course, which has been very buoyant has been both L&T as well as BHEL. Just wanted to get in your reaction on the earnings over here, and how is it that you see the stocks actually perform here onwards, Narendra? Today, of course, they're seeing a big reaction.
Yeah, definitely we are positive on the space largely. If you see the growth trajectory for this infrastructure construction space, so it's very much in the focus of the government, wherein the infrastructure spending is picking up pace. And in comparison with the H1 of the current year, we are likely to see an increase in spending by the government, and even the awarding activity has also picked up pace, and we are quite optimistic about the rest of the year, the awarding activity to pick up pace from here onwards. So the macro remains stable and gradually improving. So I think that bodes well overall for the stock in medium to long term.
That's that on what you're seeing on L&T, even though the stock has eased off a little bit from the session top as we speak right now. And of course, BHEL is still standing very, very strong as we speak. But Rajesh, what is your own sense on the charts for both, L&T as well as BHEL, and whether you see a continued or, follow-through up move in both these names?
So if you see the recent performance, L&T has been outperforming since last few months, and BHEL has now come out of its consolidation. So maybe in near term, Larsen, due to its overbought conditions, may bit consolidate. And since BHEL is a bit of a momentum, high beta counter can outperform. Possibly BHL can retest its recent swing high of 275 to 280 levels, and on the downside if we see the breakout levels around 255 to 250 are likely to act as a support. So positive on both the counters, but if we consider from a trading point of view, in the near term, we expect L&T may consolidate, whereas BHAL can continue with its momentum.
Okay, and what about Dr. Reddy's? Talk to us about that on charts.
So if we see the stock has broken below multi-month low, and we are seeing a fresh symmetrical triangle breakdown. In fact, the stock has also slipped below its 200 DMA. So in the near term, possibly the stock will continue to underperform. Possibly the May swing lows of around 1140s can be retested, and as long the prices doesn't regain about its 200 DMA about 1235, the stock may remain under pressure.
Okay, let's address some more piece of news. And Vodafone Idea shares have crashed today after the fine print of the Supreme Court order on the AGR dues raised concerns. In fact, sources say that the Telecom Ministry is still assessing the order and will seek legal advice. Prakash Priyadarshi, my colleague, is here with more details on the same.
Well, there's new twist in the Supreme Court judgment related to Vodafone Idea's AGR dues matter. In fact, a few days back, when the court passed its judgment, it was believed that there's going to be big relief for the company. But according to Supreme Court's written order, the relief is limited only to waiving the additional AGR dues. Essentially means demand raised up to financial year 2016-17, a very significant observation. In fact, company's initial petition in court sought a waiver only for the additional AGR. And therefore, as a result, only about rupees 9,400 crore of the company's additional AGR dues will be waived. However, the company amended its petition after that, requesting Supreme Court a waiver for entire AGR, including penalties and interest. But at this point of time, it's a very significant observation. However, it is important to note that the Supreme Court has not restricted government providing any sort of financial relief to the company. In fact, court has permitted the government to take policy-related decisions to provide relief, and it will not intervene in policy-related matters. Essentially, we are not fully aware of the government's strategy at this point of time. In fact, how will financial package be structured? But now the ball is in the government's court. Sources are indicating that the Telecom Ministry is still assessing the Supreme Court order on Vodafone Idea and will seek legal advice on the order, and any further action will be decided after receiving legal advice.
Okay. Right. Narendra, let me switch back over to you. Give us a sense with regard to Dr. Reddy's, this reaction on the counter, we're now around 5% lower on Dr. Reddy's, if you can pull up. Okay, 4% lower off the day's lows. Do you believe justified for the approval, which has been deferred, if one can call it? Do you believe justified this 4% knock?
I think you have to see it from a perspective that GLP-1 opportunity was anticipated as a big game changer for the company. And if you see their current pipelines, so there have been headwinds. And as the launch nears and the patent expiry comes near, it is around January 26. And with this observation in Canada, market was expecting it to be $100 million kind of a contribution, which could happen for the company in FY27. So I think it's really important setback, a major setback for the company. And I think now it remains to be seen how the company goes ahead with this and what kind of remedial action the company takes and how soon it takes. Because generally what happens is that after patent expiry, the sooner you launch, if you are the first one to launch, then you tend to capture a major share of the market. And the moment you falter on the immediate launch, you have to play a lot of catch-up game, and eventually the pricing erosion also you have to take on your launches. So I think from that perspective, the market has taken a negative reaction on the stock because of that uncertainty which has arisen out of this observation of the Canadian drug control.
All right, let's leave it at that. Where pharma is concerned, Cipla, DRL, both of them under pressure. today, and the pharma index too not looking pretty at all. So, of course, that's how it's playing out. But what we'll do is, let's switch focus. The beginning of the month often marks key financial activities, salary credits, bill payments, and planning expenses. But just as we plan for our expenses of you, and what you're seeing is a good set of numbers. The numbers are above estimates clearly, and you can see the spike in the stock price as well. 1572 crore, 1500 odd crore was what the consensus PAT estimate was. So nearly 5% higher where that number is concerned. 17,460 is the top line number, which has also been slightly, marginally better than the estimate. EBITDA is where some of the beat has actually come through, and 2428 when it was expected around a 2380 kind of number, and therefore you're seeing the kind of PAT beat. So positive with regard to margin tailwind, which is what seems to be aiding the numbers for Hyundai Motor, and that obviously stock doing well to start with. We'll obviously see how it progresses as we close in to 330, but obviously stock doing very, very well. I believe we still have Narendra, right? Narendra, give us a sense how you're looking at the numbers for Hyundai Motor.
Yeah, I think on a broad basis, it looks within expectations, but lately the company has not performed in comparison with its other peers, and it has, I think, in last 2-3 quarters have lost its spot to Mahindra in terms of number of sales. So I think also the lineup of new launches is also not that much promising for the company. So I think there's a lot of catch up also has to do in terms of new launches and the improvement in the vehicle number sales. So that's a tough task. So I think it would take time for the company to, I think, recover. And in the recent numbers also, if you see the company has not performed, especially post the announcement of GST cut. A lot of its peers like Maruti and Mahindra have shown decent numbers. So I think there's a lot of hard work for the company to do, and I think we prefer Maruti Suzuki and Mahindra in comparison with Hyundai.
But the stock, of course, finding favor. Rajesh, do you have a view with regard to Hyundai on charts?
So yeah, if we see since last few sessions, the stock has definitely attempted a bounce. In fact, on the daily chart, we are seeing a morning star pattern and a follow-up buying is there. So possibly the stock can extend its bounce towards 2500, which is its 50 EMA. And once that is crossed, then possibly 2700 can be retested. So as of now, the stock is showing strength somewhere around 2300. Stock is having strong support zone.
Okay, and give us a sense, Rajesh. What about some of the other auto counters? An M&M, a Maruti. Do you like any of those? Is there a tilt towards some of those names versus a Hyundai?
So if we consider from the four-wheeler space, we personally are liking two counters. One is Ashok Leyland. The stock is continuously moving in a higher top, higher bottom, where every dip is getting bought around its 50 EMA. So we are very strong bullish on Ashok Leyland. Somewhere around 135, there is a strong support, and we expect the stock to extend, move towards 150 levels. The second counter that we are bullish is Bharat Forge. The stock has given a strong cup and handle pattern on the weekly chart, and possibly the stock is headed towards 1450 levels. So any dip towards 1280, 1270 can be bought. The counters which you asked, Maruti and M&M, are a bit in a consolidation mode and may remain in that range in the near term.
Okay, all right. So that's on Maruti, M&M, Hyundai, the whole auto pack. What about the two-wheelers, Rajesh? Do you like any of those names?
So if we say TVS Motor, it has corrected sharply from its recent high levels. But in the past, we have seen that any dip towards 50 EMA has been bought. This level now coincides with its previous swing low. So we are somewhere cautiously bullish on the TVS Motor. Somewhere around 3400 strong support is there. And we expect the stock to rebound towards 3700 levels.
Okay, all right, Rajesh. I'm told we have to let you go on that note. Thanks so much for coming and joining us this afternoon, giving us all of those views. We'll let you go. All right, and viewers, what we'll do is we'll also slip into a very short break. on the other side. We'll continue to talk stocks. There are plenty of buzzers. Stay with us here on ET Now. First, start off, take your view on the index. Give us a sense how you're viewing the move today, at least on the index. Give us.
Very good afternoon to all. So if we talk about Nifty first, so Nifty after hitting 26,000 marks in the previous week is consolidating from last 4 to 5 sessions in between 25,750 to 26,050 levels. And that's a good sign, a healthy sign. So on the technically wise, weekly scale, the structure of higher lows is intact. And our sense is that till Nifty holds above 25,750 levels on closing basis, overall the bigger trend would be positive. However, from last couple of days, we've seen some pull off from the higher levels, but the consolidation is likely to continue between 25,750 to 26,050 levels. Positionally, till it holds about 25,750, our view would be positive for an upside move towards 26,100 and then 26,350 levels. Talking about Bank Nifty, so Bank Nifty also after hitting lifetime highs has been consolidating from last 4 to 5 sessions between around 58,000 levels. The good part is that it is holding above its rising trend line and 10 DEMA is acting as a crucial support. So overall, some cool off is seen from the higher levels of kind of profit booking, but the bigger trend is still positive. Major level to watch out for Bank Nifty would be 57,700 levels. Till it closes above that, a stance will be positive with over consolidation bias in Nifty and Bank Nifty.
Some of the movers, Arpit, one of the big ones, in fact, today is an Ixigo, 15% lower. Now I understand this is on the back of numbers, but talk to us about how charts are looking. This one has had a one-way ride over the last year or so, so phenomenal returns. But talk to us about what today's move means and how is this one looking on charts?
Yeah, so definitely looking at the chart wise, if we see, we have seen a one-way move from almost 200 to almost 340 levels. And look at the weekly setup wise from last 10 weeks, the lower band of the stock was around 260 levels. And today the stock is taking some support from that similar levels. However, looking at the daily setup, definitely a big gap down is seen. So looking at the overall chart structure wise, the stock is at a major level that is around 265 to 70 zones. After a very long time, it has closed below its 50 DEMA. So I think this level would be important level to watch out for around 270-75 levels. So we would suggest that better to wait for a day and wait for a closing setup wise. Technically level wise, 260 is a major support. On the upside, 285, 290 would be the hurdles.
Okay, that's the take coming in on an Ixigo. Now let's go across. We have the Canara Bank press conference, which has started. We have Mr. Satyanarayana Raju, who's the Managing Director and CEO of Canara Bank, speaking live. Let's cut across.
This quarter also one more drinking water project was there in the Telangana. That is also appearing in the SMA. Against that also we are already provided against the standard assets itself is 380 crores. So we are doing this job already for the last 2 years. That's why now we don't find any with the almost expecting a annual net profit is more than 20,000 crores. We don't see any concern about that the expected credit loss, and the effect will be very meager and very minuscule.
A follow-up question, sir. If I may ask. The provision you mentioned, is that additional provision or floating provision?
Yes, sir. These are all additional provisions, which are not required to be provided, but we are providing.
Okay. So what is the size of additional provision you have in your books at this point in time?
So almost it is around 2,000 to 2,500 crores. So 3,500 crores excess provisioning is there in our system.
Okay, sir. Thank you so much.
Thank you, sir. Sanal Sudevan, you can please introduce your publication and proceed with your question.
Yeah, sure. So, sir, my name is Sanal. I am from the New Indian Express in Chennai. I just want to understand with.
Okay. Got it. All right. So that's, of course, the management of Canara Bank. Now, the numbers were solid, right? Where asset quality is concerned. You had a decent set of numbers which Canara Bank disclosed. Stock also perked up around 3% in trade. Profits surging, supported by good net interest income growth and, or rather, flattish kind of net interest income. So margins continue to be under some bit of pressure. You want to watch out for a Can Bank. But Narendra, do you have a view with regard to this one?
Please help it.
Yeah, definitely. We were positive on the overall public sector bank as a bank, and definitely the story has been continuing in terms of improvement, gradual improvement in the NPAs and improvements in the profitability. If you see the ROEs of the banks are also have also public sector banks have also shown improvement, and as a result, the market has also given thumbs up to the sector. And what we are right now seeing is that the pack which were trading at around zero point 0.4, zero point 0.6 book value has now started trading between 0.9 to 1.1 kind of book values, which is a decent catch-up play happening. Now going ahead, I think the performance should continue to remain at least for some more quarter for the public sector banks.
Okay, that's that on PSBs. Can we take it back to Canara Bank and what the management had to say? Yes, we can cut across.
So the consumer market is doing very well because of the GST rate cut and all. These are all also helping, but simultaneously, it is the functioning of the public sector banks are also the efficiency improved in the public sector banks in monitoring and underwriting also has helped in this.
Okay, thank you.
Sanal, do you have a follow-up question?
No, no, no. Thank you. Thank you.
Okay, thank you. So we have 3 questions from Aryan Khanna from Informist Media.
Right, we will get back to Canara Bank management as they speak, and once we have clearer visibility on what the management really has to say about the future course of course, which way the business may be headed. But kind of a mixed bag, one would say, given that there has been a dip in the NII. Harsh, how would you analyze the numbers, or in fact, what led to that? I would ask.
Yeah, so the Canara Bank numbers, the NII, let me just first take you through the numbers itself. 2% down on the NII count. Other income was up a very, very solid 42% YY, flat QOQ. And that led to operating profit remaining fairly elevated, up 12% on a YOY basis. Provisions were muted, both QOQ and YOY provisions were down, which is a key positive. And you saw profit after tax surge 19% as a result on a YOY basis. So fairly steady where the asset quality is concerned. That's what really stands out in terms of those numbers. When you're looking at the credit cost number, it's come off quite sharply. You're seeing net interest margins at around 2.5%, down 5 bips QOQ. That might be a bit of a worry, but that has been brushed off because you've got very, very solid hold up, if I can call it, in the other income number. And that's what's leading the beat. Your credit cost number is at 0.68 times versus 0.72 times, 0.68% versus 0.72% on a QOQ basis. So it's come off as would be anticipated. When you're looking at growth, very good growth. Advances at 5% QOQ, deposits at 4% QOQ, mid-teens growth on advances, early teens growth on deposits, looking extremely strong, frankly. Everything except that margin number looking in fine fettle where Canara Bank is concerned. What we'll do is we'll slip into a very short break. On the other side, we will talk about some stocks which are moving. And before we do that, let me bring on board Sunny Agarwal, Head of Research Fundamental Desk at SBI Cap Securities. Great seeing you, Sunny. Good having you here. Now let's talk about Sagility in particular. That stock doing fairly well in trade, and I want to quickly highlight some points here. You've seen a 7.7% QOQ growth in the revenue number. In terms of EBITDA, it's up nearly 20% on a QOQ basis, and profit after tax is up a solid 70%. That's because margins have also expanded by around 250 bips on a QOQ basis. Now, it's not just that. It's also the commentary, and I read out the commentary, and thanks Srishti for putting this together. They've basically raised their overall revenue growth guidance to 21% from the earlier 20% number. They've maintained their organic growth guidance at low to mid-teens, and they've adjusted their EBITDA margin guidance to around 25% versus 24% earlier. So not only are they bumping up their revenue guidance, they're bumping up their EBITDA guidance as well, and 25%, mind you. That's the kind of margin that they are expecting. They were doing less than 23 same time last year, and that's what's leading to this kind of tailwind in the counter. This is, Sunny, okay, before I come to you, let's go across
Yeah, I think we have the Cipla management joining in, and let's hear out what they have to say about the conference call and, of course, the numbers.
Running with the theme of caring for life. And I believe where Cipla is today, 11 years later, I think it's reached a stage where it's ready for the future. And it's a solid organization that can continue to grow sustainably. And we've developed a very good talent pipeline that can help take the company forward. So I just think that from my perspective, what the task I had set out to do through my 2 terms is achieved, and Cipla is now in good hands of the rest of the management team and Achin to take this forward.
So I assume you're not retiring from the pharmaceutical space.
Well, not really. I'm not going to retire. But my own view on that is that we probably should not retire till we're 65, 70, or whatever the age that we can work till. So I'm not retiring as yet. No.
Just about Cipla now, there was this sort of stability when you came in for the past 10 years that even if the promoters are not actively involved, there is, Umang to sort of steer the ship. There seems to be now a vacuum amongst a couple of analysts and investors that I've spoken to. What is your sense in terms of what the future for Cipla would look like, and would a possible stake sale now be back on the table?
No, my own view is that, and I say this always, Ekta, and with humility, that Cipla is today an organization that is completely professionalized. And I think the promoters, and my due credit to them, they have enabled this. And the organization today is truly run by professionals. The promoter insight and guidance is always there. The board takes a very active role. I don't think there is a vacuum. I think Cipla has enough talent to continue to guide it. And there have been people in Cipla who've, worked, who are lifers in Cipla and continue to be there. And I think it's, I don't think there's a vacuum, and I think the stability will be there, right? Every 11 or 12 years, management teams change. And I think the change sometimes is for the good in order to take the company to the next level. So I think we're going through that change here. Yeah.
Sure. But just before I hand it over to the next person to ask the question, just wanted to understand the tie-up that you have, announced with Eli Lilly for Mounjaro, which is obviously going to be branded differently. But is there a revenue share? If you could just spend more time giving us more details in terms of the revenue share, whether it's exclusive, and what does this do to, say, a semaglutide launch for Cipla? Would that be still on the cards, considering that you are selling a competitive product in the market?
So maybe I'll add, there's not too much that we can speak about in the agreement, Ekta. We're very, we have a confidential agreement with a very strategic and long-term partner with Eli Lilly. We practically sell most of Eli Lilly's range today in India. But what I can share with you is that this is a trusted partnership, right, between Lilly and Cipla to service the India market. There is obviously, you're aware that Eli Lilly's brand is already selling, and Cipla will supplement that. I think the other thing that I can say is that you can expect margin structures to be very similar in the past transactions that we have done with Lilly. And we can't exactly divulge what the margins, etc. are. We believe that tirzepatide is a product with superior science, and has the ability to firstly create the type of outcomes that people want. We kind of see it's superior to semaglutide as well. And on sema, depending on how our product gets approved and how soon we are ready to launch, at some point in time, we'll have more clarity on that as well.
Okay. You also have a $1 billion guidance for the US. Does that still stay?
Directionally, yes, it should. Obviously, when we gave that guidance, we said we would have launches which would come in to substitute what we would potentially lose with Revlimid, and I think directionally that guidance stays even today. This year we may not be at $1 billion, right? But at the same time we're not going to be we're not going to be so off the billion either.
Okay, all right. I'll join back. Thanks. Thanks very much, Umang.
Thank you, Ekta. Next up, we have Vishwanath Pilla from Money Control. Promoting you to a panelist.
Hi, Umang. First of all, I know we're going to miss you. From maybe what is from I've been tracking, your this thing. I mean, like your CEO has days for like every quarter for last 10 years. Kind of a great journey for Cipla. I mean, we've seen the numbers, that reflect what they've done. So, I mean, coming to this whole Mounjaro, the license, it's a very strategic license, as you mentioned. How are you planning to expand the access, sir? Is there any strategy that you put in place to take this drug even more, into the, I mean, using the Cipla network? Is there any strategic plan that you've put in place, sir, I mean, for this?
Yeah, no, I think Vishnu, that's a great question. And by the way, thank you. We've got an association from before my joining Cipla. So I echo the sentiment of, wanting to speak with you very often. So thank you for that. I think, yes, the purpose of what we're trying to do is to take the product much deeper into India. And I think that's where the Cipla network comes alive. And Cipla will lend that network. Cipla will lend the ability, the might of its distribution and the might of its field force to be able to take the product into the interiors of India. So we're committing to that, and I think tirzepatide, as I mentioned before, is superior science, and we believe in the value that it'll create.
Well, that's Umang Vora battling out questions over there on why is it that he actually chose to step down much before or few months before his tenure was actually going to come to an end. But you're not really seeing much of a resurrection, at least in the Cipla stock price. It's still reeling under pressure, down about almost 2.5% as we speak right now. Let's move forward then, and let's see how the last lap of today's trade has panned out so far. And it has been definitely a weak day, so to speak. In fact, as we speak right now, we're down about over 200 points for the Nifty futures. Technology, or rather telecom, of course, has been one such weak link in the market. But look at the DRL, for instance. That's also slammed about over 4% on the futures. Cipla is also down 2.5%. There's been other heavyweights like Bharti, Interglobe Aviation, Infosys, Bajaj Finance, Reliance, M&M, not really seeing any much of a gain over there. In fact, even L&T, to think of it, this was the one standout winner from the word go today. That also has given up a large chunk of its gains. I mean, it was, I think, standing up almost about 2% when we started off trade. And from there, it's up only 0.7% as we speak right now. Other than that, the breadth of the market also is weighed down. HFCL, IEX, LIC Housing, Idea. Idea is now down about almost 7%. But yes, there are those handful of winners too. Policy Bazaar, BHEL, AB Capital has spurt up very smartly after its numbers. And mind you, the numbers came in, I think, just about 15 or 20 odd minutes back. That's jumped up 5.5% as we speak right now. Didn't have much time to look at those numbers, but operationally at the first glance, it definitely looks like a good set. 327 is where that stock is right now. Other than that, of course, Canara Bank, IIFL. So suffice to say, a very earnings-specific reaction is what you're seeing from the street today. But Sunny, did you get a chance to look at AB Capital at all? The numbers just came out. Sunny, if you can hear me, AB Capital, any view there? The earnings just came out,
Yeah, good afternoon. So just, I mean, a broader number which I could look at is that so their lending portfolio has grown by closer to 20-25% on NBFC side, and on housing side, it's in 65% growth. So that's a pretty strong growth as far as the credit on both NBFC and housing finance business is concerned. Asset management business again seems to be doing well. There also we have seen a kind of 11% year-over-year growth in quarterly average AUM, and at the same time, life insurance business has seen 19% year-over-year growth in terms of margin collection, with the VNB margin at 11.6%, and health insurance business 31% growth on gross premium collection. So seems a very broad-based growth as far as all the businesses are concerned. One need to check whether is there any one-off in the base quarter which has led to a muted profit growth on a year-over-year basis. But operationally, numbers seems to be very pretty strong for Aditya Birla Capital.
There in fact is, Sunny, not in the base quarter, but in the current quarter, we've seen around 160 crore one-off in terms of the profit after tax from the sale of one of their subsidiaries. So therefore, you're seeing that kind of number. But yes, broadly, it's a steady set. It's a 2.2% ROA that Aditya Birla Capital AB Capital has clocked. And therefore, you're seeing that kind of surge on the counter. But talking about NBFC, Sunny, any of the housing financiers looking attractive at this point? We've seen a rally among the smaller ones. Among the larger ones, LIC Housing came out with numbers not impressive at all. In fact, the street is absolutely unenthused by it. 4% lower. The guidance also that came through wasn't exactly the best. What's your sense with regard to this one, trading at sub 1 times book?
Yeah, again, I mean, LIC Housing Finance has not been able to deliver growth in a scenario where all the other smaller players are delivering a fantastic growth. So I think again, seems to be a case of clear underperformance as far as growth is concerned. So despite of trading at a very cheaper valuation, would like to avoid LIC Housing Finance and would like to prefer other smaller players like PNB Housing came out with a decent number, although there is a overhang of management change over there. And in addition to that, we continue to remain bullish on Home First as well as India Shelter Finance.
Okay. The other couple of stocks which we really wanted to talk to you about, Sunny, is with regard to Sagility. The numbers were stand out. They've upped their guidance. I'm not sure if you track it, but does it look interesting at now nearly 8% higher in trade today? Does it look interesting to you as a business and in terms of the way in which the business is making progress?
Yeah, definitely. I think a very strong set of number by Sagility, approximately on healthcare story of United States of America. And at the same time, we have seen a minor upgrade in terms of growth guidance for fiscal year 26. At the same time, trading at a reasonable valuation, even if I ascribe a 30 time price to earning multiple, the company has got a potential to deliver a kind of 1,000 crore annual profitability. So 30,000 crore market cap, I believe, is a fair value of Sagility, wherein the current market cap is closer to 25,000 crore number. So I think 20% upside is something which one can expect from Sagility over the period of next 6 to 12 months.
Okay. All right. So Sagility out there. The other one that I wanted to talk to you about is also a Web of Global. Now, in an otherwise, at a point, Sunny, when you're seeing some of these retail export names in India looking more and more difficult because of the tariffs, life looking more and more difficult for them. This one has delivered a very, very strong set. Again, I'm not sure if you track this one, but very strong set of numbers, and the stock is again up 6.5%. Does it warrant the kind of move, one? And does this one also look interesting? Does the story look interesting? Because the next 3 months is going to likely see festive ordering coming in from Europe, US, UK, and therefore this one might continue to be in focus. So trying to get a sense from you.
Again, Harsh not tracking very actively as far as Vaibhav Global is concerned, but prima facie number looks to be very pretty strong optically. But I would like to dive deep to understand what driving this growth. But obviously, the overhang continue to remain that in case there is some delay on a trade deal front between India and US, whether it will impact the business for an upcoming very signally strong quarter, which is the December quarter.
Arpit, what's it looking like to you? Any of these mid-caps and very earnings-specific reactions today, everything from a Canara Bank to an AB Capital, BHEL, Policy Bazaar, any trading opportunity there? Maybe not today, just a few minutes left, but tomorrow?
So definitely, if you see a very stock specific action is seen, and if you talk about PSU banks, they are the outperformers. Particularly if you talk about the chart structure of Canara Bank, so a classical range breakout on the monthly scale, and the entire PSU index is at life high 80. So that clearly indicates that the outperformance is likely to continue. So one can go long with keeping stop loss of 125 for an upside move towards 140, 145. Second would be from the metal space. Metal index is at life high 80, and within that, Hindalco is a preferred pick. So looking at the chart structure of Hindalco, strong uptrend on the monthly scale, range breakout after almost 13 months. Structure of higher lows is intact on the weekly scale, and on the daily scale also consolidating. So slowly steadily the stock can head towards 900, 920 levels positionally. So Hindalco and Canara Bank would be stocks to watch out for from a medium term to long term perspective.
Okay. Arpit, what's the sense like with regard to, again, an LIC housing? It's one of those buzzers. How is it looking on charts? It's been a long time since we've seen any major movement on this one. And I'm saying, you know, major, by major, I mean something which has moved up maybe 2x in 4 years. That's not really happened. Give us a sense.
So talk about overall the housing space, particularly if you look at the chart of LIC housing. So if I look at the monthly scale, definitely the stock is stuck in a very tight range from last almost 8 months between 600 to almost 400 broader range. On the immediate basis also, if you see it is trading in a narrow range between 540 to 620 levels. So look at the chart setup wise, definitely the consolidation is likely to continue. And the key level to watch out for many major upside move in the change in the trend would be around 620 levels. Till then, our sense is that the stock is likely to consolidate between 520 to 620 levels, and definitely there are better opportunities within this space that one can go for.
Now, you know, some of the other names that were in focus, UBL, Radico, those were just a couple of other names and same kind of segment. You know, Sunny, tell us, some of those numbers not looking pretty at all. What's going wrong in your opinion, and is there a turnaround at play at some point?
Yeah, again, Radico, I think you're talking about Radico, right?
Yes, please. And UBL, United Breweries.
Yeah, United Breweries, yeah, definitely, I think a weaker set of number by United Spirits. Obviously, maybe this may be due to an extended monsoon, because if you look at the product of United Spirits, more of an summer portfolio, and that is something which could have led to a muted performance, because ultimately the top line is something which has not seen any growth during this quarter, and that has led to a muted performance. On the other hand, Radico has delivered a very solid set of growth led by the premiumization. So the prestige and above portfolio has done pretty well. Although this quarter we have seen a very handsome growth in the bottom of the pyramid portfolio, that has led to a kind of muted expansion as far as gross margin is concerned. But overall trend of premiumization seems to be continuing as far as Radico Khaitan is concerned at a current juncture.
Right. Okay. That's the take coming in on Radico Khaitan, which also has seen an earnings reaction come by. But other than that, you know, like we've been discussing, it's been a very, very stock-specific day and very earnings reaction-specific day at that, be it an L&T, be it a Policy Bazaar, BHEL, AB Capital, or for that matter, Can Bank. On the losing end as well, it was, you know, a lot of news-specific moves which actually dragged the stock lower, be it DRL, Idea, or for that matter, the entire telecom space. I mean, in fact, today, telecom is the biggest sectoral loser, not just Idea, which has crashed about almost 7% or so on the futures, but even a Bharti, Indus Tower, they are also seeing pressure. Other than that, Reliance as well goes home with a 1% downtick for itself. Interglobe Aviation, Infosys, HDFC Bank, which was lower, Trent, TCS and ITC ahead of its numbers tomorrow. That stock as well is headed in lower into the close. Other than that, of course, you know, Ultratech Cement, Nestle, Shriram, they managed to just about hold their head above water, but that was not the case for a large chunk of the Nifty composites, because that's where you've seen some acute pressure built in. Coal India managed to hold out even though the numbers were weak. but that stock managed to gain ground by about almost 1.5%. Hindalco continues its uptick. The metals rally, clearly some of the resilience at play here. Maruti, Shriram, Ultratech Cement and Adani Ports to some degree were also some names which just about managed to latch on to the trade.
All right, so of course those names in focus. Let's talk about how broader markets have done as well. A relatively better day for broader markets, but no respite per se. It's not like they stood out in any fashion. There was still pressure on the Nifty mid-cap and small-cap indices. There you go, flat on the Nifty mid-cap. The small-cap was down 0.1% thereabouts. A bit of a recovery, in fact, that we saw on both of those indices right at close. So that is something, again, that looks interesting. Let's look at the breadth as well. Let's flip it over, try and see how the breadth has done. And within at least broader markets, the breadth was relatively better. The Nifty breadth was quite weak in that sense. 37 declines to just about 12 advances. So that was where most of the pressure came from. But within at least the Nifty small cap, the breadth was okay. I mean, 106 advances to 136 declines. Not as bad is how I would put it. The realty index has closed in the green, surprisingly. We're flat, slight positive bias on the realty index, closed in the green. The Nifty IT index was down around 0.5% thereabouts, one of the top losers, along with the pharma index, no surprise there. The PSU banking index down around 1/3% thereabouts. The auto index was also down around 0.5% or so. Within the Nifty small cap universe, some big losers, and of course, in fact, there aren't too many big ones, but there were still losers. And NMDC Steel, a V-Guard, and IEX are just some of the names which are sitting in the red, 3+% lower. And within the winners, well, there are quite a few big ones there. 9% higher on Chennai Petro, 5-Star Business up 7%, Web of Global up 6%, NLC up 5%, and MTAR Tech also up 5% thereabouts. Even and something like a Credit Access, which came out with numbers, is up over 4.5% in trade. So quite a decent day per se for some of those names. But with that, that's all we have on closing. But before we take it forward and close the show today, we were at the Global Financial Planner Summit